Good morning, traders, from a sunny and beautiful Tuesday morning here in Chicago. It's 8 a.m. Chicago time, the 12th of July, 2022. This is episode number 2270. Thanks for joining me again. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. 1 second here, just noticed a little issue. All right. So here's what we've got today for the pre-market summary sheet from Convergent Trading. We have a slight risk-off sentiment coming into today. The S&P down 12.5 points. The Dow is down 175 points. Interestingly, the Nasdaq's up 26 points, or 0.22%, and the Russell's off 7.1 points. The Euro stocks and the DAX are both off. The driving force here, not only did the German and Eurozone zoo economic sentiment surveys miss dramatically, but we also have this increasing risk of another China-based shutdown. The Eurozone Zoo Economic Sentiment Index for July was forecast at negative 33.5, negative 33.5. The prior's negative 28. It came in at negative 53.8, 53.8, basically missing by 20 points. Pretty bad. Same with the German Zoo Economic Sentiment Index, was expected at negative 39.2. The prior's negative 28, came in at negative 53.8. This morning we get the U.S. IBD tip economic optimism at 10 a.m. We get Fed's barking at 12:30. We get BOE's Governor Bailey at 1, and then the API crude oil stock change at 4:30. The Japanese Reuters Tenkan Index at 7, and then a key number from China balanced trade for June at 11 o'clock Eastern U.S. time. Again, one of the key jitter creating factors here is the China COVID risk is rising. Cases are increasing, and although China has softened their stance quite a bit on the zero tolerance policy that they have, the numbers are such that there's a high risk of a shutdown, which again would create some supply issues and so on, like we saw earlier this year. So that this kind of incessant problem with this pandemic is just continuing. The other piece is that the dollar is really continuing to push higher. It breached 108 this morning. The euro still heading towards parity. It looks like the pound also getting hit, and the Japanese yen, which has been making some big moves, is up today. The other piece is that basic materials, commodities, also taking a slump here. Crude oil off almost 5%. Crude was at a low of 98.40, which was about 80 cents from where we are here. Crude was down over 5% this morning. And then we have copper, which has already taken a bit of a hit. I was going to pull up a chart of copper, actually, just 1 second. Forgot to post it. Copper futures. There we go. So here's the daily copper chart right here, just to give you an idea. Now, copper is very, very important basic material. It simply speaks to demand. That's what copper speaks to. And look at what it's done on the daily here. This is a volume profile chart, and it's coming right back to support. We broke that resistance double top in 2020, late 2020, on the big rally into the close of 2020, and we are back at those prices. This double top comes to us from 2018, and we're back to those prices. So this is an important thing to keep an eye on. Again, copper is one of the key basic materials globally, and it speaks to demand. It basically tells us what the demand picture looks like. So I'm showing you that just to show you the extent of this move. Copper got as high as $5, and now it's almost half back. So this is a pretty impressive move. Same with gold and silver. I mean, they're not off as much as copper has been, but they've been quite weak in a dollar strengthening environment. So that's that. Looking at the S&P, the S&P is in a B-shaped profile. The S&P is currently testing a very key area from below the 3850 century figure and the 3851 week low from yesterday. We'll look at that here in a second. B-shaped profile. It opened and sold off well before the Zeus survey came out. Well before anything. It basically completed the move that was expected to happen yesterday, which is to push into 3840. We'll look at that in a second. The volume, 200,000 contracts, so relatively light-ish compared to the most recent pre-market sessions, but relatively in line with the statistical norms. Okay, the inventory is 89% short, and the range is 44.25 points. 44.25 points. So we're coming into a session where we might expect a little bit of movement. So let's look at a chart here. Switch to the TPO chart. So this is the big picture chart that I use to look at how things are laying out. And again, I'm not going to go through this narrative again. We've been through it a lot. Let me shrink this a little bit. We've been through this a lot over the last few weeks. We put in this low, which I called an intermediate low, swing low. We went back into balance. We had 3 days of balance. We broke down 2 days of balance, and we went back into the prior balance, and we broke higher into 39.50. And then we came all the way back into balance here. Remember the 37.75, that darn number. And then we broke out of there last week, only to make a turn at, what is it, 39.40 or something like that, or 14 actually, 39.14. And then this is yesterday completely balanced, completely sideways, just really not too much to write home about. Look at that. It's just yesterday what we did is we put in this bottom, we put in a higher low, so now this triggers one time framing up on the daily. So now the trend on the daily is triggered higher, so this low is important. Then it puts in a higher low, so now this low is important. Puts in a higher low, so now this low is important. And as we know, yesterday we opened at that low, tested up towards that 38.82 that I talked about in yesterday's Trader Bite, and then rolled over and consolidated right in the middle. The expectation yesterday is it would likely run to 38.40, test the 38.40, and it just could not do it. A very choppy. You could see yesterday was, if you're part of the Conversion Trading Head Trader channel, if you're able to see that, you could see that early on I started to, because of the way the trades were moving and coming right back, I started to say that this is looking very balancy, and not to expect much from your runners yesterday. And so this is where we ended up. So we ended up with this kind of chunky profile with a weakish bottom. Let's look at it from another perspective. This is my PNF chart, my point and figure chart. Here's the expectation from yesterday. This is what was expected right here. This is what we talked about in yesterday's trader bite. Let's maximize it. So here we are. I talked about the one-time framing. I talked about the fact that we put in a week low at 38.60 something yesterday. 38.60 something, 38.65 or whatever it is. And then the idea, let me change the pen color. The idea behind this was that we are likely to open and we are likely to test the 76, the 82 area, 82 area, that's this circle here. If not, we may push into this next stock zone at 92, but the big number up above is the 39.06. So I'm expecting resistance. I don't know where it's likely to turn, but the expectation is we open, we go back into the prior day's range, and we are likely to turn at these figures. Okay, at these points. That's what these little mountaintops are for. These are reversal points, and then once we reverse, I would be looking for the 38.40. This is the key over underline. It's actually just below 38.40 at about 38, something like that. Let me see what exactly it is. Seem to have lost my memory on it. 38.36 and a quarter, which was a low temporarily in the overnight session. So that's the plan. The primary plan is we're looking for it to climb, and we're looking to sell that climb. And there may be a stop or two because we don't know where the turn is, but we're looking to sell the push into the prior range. The key number yesterday really was 38.82. If you recall, that was a full session mid. We talked about it quite a bit, in fact, earlier in the video. Hang on, as we go back here, there it is, 38.82 right in there. Okay, so we tested up, we came down, we have, look at the bottom here, very weak low, push back into the prior range, and I expect it to fall over. Why? Because it broke the one-time framing on the daily, the one-time framing up on the daily. It broke the last high, the last low. So I'm expecting some of the size from above to flush down. So we covered a lot yesterday. You're welcome to catch that video, of course. But let's look at today, because that's where we are. And then, or yesterday, we open up, we immediately test the 38.84. So this kind of pushed through the mid, which was at 82 right here, pushed through by a little bit, and then we got this impulse down. This is a first impulse down. So now we're looking for a place to get short. An impulse really tells us a lot. There were a couple of really solid opportunities yesterday, but again, as those of you in Convergent know, the runners didn't run very well. Finally, we put in the IB. Look at this low. We put in a low. We put in a lower low, which is basically a weak low. This is a bit of a double bottom. We go back to mid, which really sets up a short, very noisy short, and then it puts a higher low in, comes back to the middle, and that tells me that the short trade is likely to get flushed, gets flushed here, and then it starts to move towards the high. So looking for the IB stat. Remember, the IB stat, the historical IB stat is that, who remembers the IB stat? The IB stat is There's around the 96, I don't know what it is, I haven't looked at the statistics lately, but it's somewhere around 96, 98% historical probability that the IB high or the IB low is broken, is breached, not touched, but breached during the day session at some point. So at this point, I'm looking for a break. Since we broke through the mid, I'm looking to buy pullbacks. I think there was a buy that was done right here against this box, against this zipper. There was a buy set up here, and it just fluttered around, and then clearly it wasn't going to take off. There was a lot of fighting in this area. Close that for about a point or something loss, and then it just kind of breaks down, and then it retests a little bit higher. It retests right into the prior day's low at 71.50, and then we finally get the move, and we get this flush finally from the buyers, these late buyers. We get the flush, and now we have a high probability tag of the IB low to fulfill that 96, 97% historical probability. Knowing that for today, that the outcome is always 50-50. Historical probabilities don't project forward. They just look backwards, okay? So since then, we open up, and then we drop right through in the overnight session. And where do we go? We go right to the over underline. There, it's labeled right there in our stock zones. The over underline, it holds this 36 area. So this was the expected move. This move below the IB that broke the IB instead of rallying. And unfortunately, it did it so late in the day. It did it into the closing range, which introduces some complexities when you're trading into the last half hour, especially the last 10 minutes. You're introducing some complexities. There's the end of day balance. There's margin covering and things like that. Not the best time to initiate a trade, but the expectation is once it breaks down, it pushes through, pulls back, retests this 50 area, and then continues to 36. That's the trade, and it did it right in here. Comes back to the 50, the mid-century figure, consolidates, breaks through. Not much of a pullback to get short, and then it continues and attains that 36. I labeled it 40 yesterday, but it's really 36 and a quarter is the level. Okay, so we get the 36 and a quarter, and we chop right here. And what do? We also create the point of control right at that 38.35 against the 36 level. So a very methodical market right now. We just broke above, and we're retesting the 38.50. I had made a note here in our head trader channel, keeping an eye on 38.50, 51 to see quality of retest from below to this multi-bottom area from yesterday, plus the mid-century figure. Under normal circumstances, this would be a setup area for me. I would be monitoring the quality of the prints. You could see that we sold into the 42, then we flipped, and we're buying into the 50 here. We're buying into the 50, and now we've got a two-way battle on the tape, and we would be looking for this to resolve itself. It's most likely going to resolve to the downside, sets up a pullback, gets short the pullback, and then look for a return into the overnight point of control first, and so on and so forth. Of course, I'm not going to do that. I'm here with you, but I also don't like to trade right at the open or right before the open. So that's where we are now. We have tested down. We have found buyers. We have a good taper on the profile. This is a pretty decent low at 38.2075, and we are above the point of control. Expect an open auction out of range for today. So what are the expectations for today given where we are? Let's draw those on here. So given that we have the overnight point of control right there, we have the full session VWAP at 38.38, just a couple points above, and then we have the mid right above that, and the market's trading at 48. I expect that we're likely to open in this area here. I expect a responsive push into yesterday's range. Gap to settle right there. Go to 56.75. Test the 56.75. We also have yesterday's point of control right at 38.57 or so. Yeah, 38.57 or so. So this area here is likely to see some resistance, and I expect it to roll over and start moving towards the 35 yet again. So we open in a gap. I expect a gap to settle trade, so I expect responsive buying into 56.57, 56.57, and then I'm looking for weakness into this area, the 56.57, looking for it to push higher and have weakness in that area before it gives up. So 56 being the prior day's settlement, 56.75, and then 57 is yesterday's point of control. So I'm expecting it to see some resistance there, and as soon as it turns over, I'm going to look for an impulse, trade the pullback on the impulse, or trade the turn on order flow, and then look for it to flush back to the overnight point of control for that stat. And then from there, I'm expecting this to continue to 38.10, the 38.10 stock zone, giving us our 40 to 50 points of range. That's the primary scenario. I'm not seeing how the market is likely. Anything can happen in trading. Anything can happen in the market. Just remember that. But I'm not seeing how this is likely to reverse given the pressure being put on the market by the basic materials dropping and all these other issues that I talked about from the CT pre-market summary sheet. The secondary scenario, open auction that comes back and retests the 42, 38, and then consolidates here for a while. Okay, so expect if we move back into balance, into the overnight point of control and into the VWAP, expect a fairly choppy play. And if we don't push through, then it is very likely to squeeze at some point in the day to 56.57, and it's very likely to push back to that 71.50 area, the 2-day balance low. So that'll be scenario 2. Scenario 3, because we have this imbalance what we're opening in, scenario 3 is very simply the same as scenario 2. So test, push, return, and then squeeze. And in this case, it is likely to get through the 3,800 and start moving down into lower prices. This is more of a driving behavior. Okay, I want to remind you that tomorrow we have US CPI. So that's key for tomorrow. Also tomorrow, pre-open, we have Delta Airlines, Morgan Stanley, and JP Morgan. We are really pushing into the really important part of the earnings season, and to pay attention to the fact that these things are coming out. Okay, I'll leave you with that. Good luck today, and I'll catch you tomorrow morning. Take care.